Hey traders, thanks for hopping in here today. I really want to talk to you today about pre-market and after hours, whether you should buy, whether you should sell, whether you should even trade. Now, some traders are very successful trading pre-market and after hours. Now, some traders will even tell you get up early, trade pre-market, it's when things can be really volatile and news is coming out and you're missing out if you sleep in a little later. Uh, I get that perspective from one angle. I think we should be aware of the news coming out 7:38, 8:39. But at the same time, you gotta trade what's comfortable to you. I avoid pre-market, I avoid after hours completely because of things like this with ALT. This stock was actually uptrending in after hours and then pre-market this morning. And then in a 1 minute candle frame, guys, I'm on the 1 minute chart. 1 minute chart, this drops from about $10 all the way down to about $5. Drops 50% in a snap of a finger. And if you're trading pre-market and that happens, it's going to be really hard to exit your position because one, pre-market's very illiquid. Look at the shares traded pre-market compared to when the market opened. I'm not sure if you can see it, but it's like 25,000 shares a minute or less. Highly illiquid. And then when the market opens, we get hundreds of thousands of shares traded a minute. But it's just, for one, it's a liquid. Two, you don't know when news is going to come out. That's why when I'm in a stock, I have my eyes glued to that stock. I'm paying attention to it at all times. What I'm looking for when I'm in a stock is I'm either playing the bounce of support or the break of resistance. Usually it's always support. I feel like risk reward management is so much cleaner off of support because you know exactly what you're risking. So I try to go for at least a 2-to-1, 3-to-1 on my risk reward or better. But when you're trading pre-market in after hours, it's a little more difficult to manage your risk just because of how illiquid it is. And also during market hours, I've hardly ever seen an offering come out in the market hours. It's usually always in pre-market or after hours, and you just don't know when that's going to drop. And because you don't know, you have to be constantly watching the stock you're in pre-market or after hours. Now, I would say it's okay to trade during these times if you're just going to be focused on the stock. But if you're not comfortable with it, just don't do it. Just wait until the market opens. Don't feel like you gotta chase a stock or trade pre-market or after hours, because other people are or other people are successful at it. You gotta find your edge, what you're good at, what you're comfortable with. Because I am sure not comfortable with this. Now let's see what ALT did over here. They came out with an offering, a $25 million direct offering priced at $5.40 a unit. And what that means is the company sold extra shares of this stock at $5.40 to somebody. Now, do you think that's fair to people who are getting in this at $10.65? It dilutes them because they're in this at $10.65 and then the company is coming up with extra shares. They're like printing extra money. They're coming out with extra shares that's not currently a part of their market cap, a part of their flow, and they sell them to somebody, and that dilutes the shareholders. If I were to sell you something like my iPhone for $1,000 and then someone else sells you the same one for like $500, I feel like I paid way more than it's worth, and that's going to make me very upset. And so that's what happened with the shareholders. They're very upset. They're like, well, someone's getting this for half the value that I paid for it, and everyone starts selling. They're panic selling. Shorts come into it. They start selling, and the price of the stock suffers because of that. I really don't understand why companies do this because I've seen it time and time and time and time again. This happen. Companies come out with a direct offering and the stock just drops. It tanks. Now maybe they're doing it, because they got to raise money or they got to, pay some employees or whatever the case may be. I don't know, but is it worth it, to sell some shares at 550 if your stock's going to drop 50%? I don't know. The point of this video is just telling you guys to be careful. Be very careful because just like this, some people woke up, lost 50% of their account. Some people were actually buying this, being day traders, and in a minute it just drops that much and you can't get out because you can't just put a market order in a pre-market because it's not the market open. You got to do limit orders. Limit orders sometimes take time. You might not be quick enough and then stock drops. So guys, just be very careful trading pre-market and after hours. It's kind of daunting, at least for me. I get very nervous to hold anything overnight because of it. I just typically try to trade, between 9:30, 11:30. Then I'll be done for the day. Traders, I really hope you learned something from this video. If you haven't yet, go ahead and hit that subscribe button. We'll see you tomorrow.